The Toronto Dominion Bank has a current dividend yield of 5.5%. Better yet, they've grown their dividend by a 5-year CAGR of 8%. But why is the stock trading at 52-week lows? In today's video, we'll analyze TD's business operations, key fundamental metrics, and technical analysis to determine if now is a good time to buy. TD Bank is the 6th largest bank in North America with 2 trillion Canadian dollars in assets, or 1.6 trillion USD as of their 2023 annual report. They break down their revenue into 4 primary segments, the largest being Canadian personal and commercial banking at 44% of revenue, followed by U.S. retail at 37% of revenue, which encompasses U.S. personal banking, wealth management, and investment services. Their next largest revenue segment is wealth management and insurance at 14% of revenue, and their last and smallest business segment is wholesale banking at 5% of revenue, which provides investment banking services to corporate, government, and institutional clients in North America, Europe, and Asia. Now that we have a sense of how they generate revenue, let's see how that translates into their financial metrics. Here we see their revenue on the right over 10 years, which has been exceptionally consistent and growing, going from $28.4 billion in 2014 to $51.5 billion as of the trailing 12 months, which comes to a 10-year average growth rate of 6.9%, which is actually lower than their TTM growth rate of 12%, which to me indicates current financial strength. Now we see earnings per share on the left, which shows a slightly different picture than revenue, showing a recent decline in earnings since 2022. Although they've still grown their EPS significantly, going from $4.27 per share in 2014 to $7.86 as of their last 12 months, giving them a 10-year average growth rate of 9.3%, which is substantially higher than their TTM growth rate, which has actually declined by -7%. Now we see shares outstanding on the left, which has been shrinking very slowly but consistently by a total reduction rate of -2.7%, which again is another indicator of financial wellness. We typically look at cash flow and debt to net income in this portion of the analysis, but neither of these metrics are useful when analyzing banks. So we'll skip to their dividend payout ratio, which has been exceptionally consistent and low at a 10-year average of only 43%. But their payout ratio has climbed to 50% over the last 12 months. Although, according to Simply Safe Dividends, a payout ratio below 40% is preferred for banks. Now that we've seen that their dividend appears sustainable, here's how it has grown over the years. They've had a 13-year dividend growth streak and an absolutely incredible uninterrupted dividend streak of 167 years without a reduction. The beginning of their dividend growth streak was so long ago that it corresponded with the first elevator installed in New York in 1857, which speaks to the quiet staying power of banks. According to Seeking Alpha, TD doesn't pay a dividend, and we can't see their historic growth figures, but using Simply Safe Dividends, we see their most recent dividend growth was 6.3%. Their 5-year growth rate is 8%, and their 10-year growth is even better at 10%. So their growth has been slowing, but is still reasonably high, especially considering that the current yield is insanely high at 5.5%. If you bought their stock today and they continued their dividend growth at their recent low growth rate of 6.3%, in 10 years, you'd have a conservative dividend yield on cost of 10.1%. And if history proves anything, this dividend will likely be sustained. Let me know in the comments if you can find any dividend growth stock with a safer and higher potential yield on cost than TD. From a valuation perspective, TD also looks to be at an incredible discount objectively with a TTM PE of 12.5, which is actually higher than their 5-year average PE of 10.6. But a PE of 12.5 is objectively low, which is a recent theme for the banking sector in Canada as well as the US, which we can see through the current PE of the Canadian Financial ETF XFN, trading at a PE of 14.4. TD looks to be an undervalued golden goose, but why is the stock down by nearly 10% year to date? Well, it's probably because Canadian and American interest rates have been climbing, which is intended to contract the economy. And TD had a recent money laundering scandal in May of 2024. But Canada just started their interest rate decline, and the US will likely start cutting interest rates as well. My capital is currently all actively deployed, but I see this as an amazing buying opportunity for any dividend investor, and I would love to buy TD stock, which we'll see in a moment is also validated by technical analysis. Now let's look at TD from a technical perspective using Schwab's Thinkorswim, a company which TD has a 13.5% stake in. Here we see TD on a 5-year time frame, and the first box I'm looking to check is an uptrend over this period, which we are in. The next buy box I'm looking to check is a below average price. The average price is shown here with the center standard deviation channel line, currently at $66.92, and the stock is currently 19% below average at $54.24. The next buy box that I'm looking to check is that price is trading at or slightly above a meaningful support level, which it is, as this support level has held over the past 5 years. not including the 2020 crash, which no company was immune to, and in recent years, this support level has remained unbroken. The last buy box that I'm looking to check is that the relative strength index signal line is near the bottom of the channel. The closer, the better, and it currently is very close to the bottom of the channel. And if we look at this RSI level throughout history, every single time the RSI was this low, the price reversed. So TD checks every technical buy box that I personally look for and looks to be at an outstanding buy point with low risk. If you want to see my stock buys and sells, check out my Patreon, where there's currently a free 7-day trial linked below. Thank you to my current Patreon members, and for those of you who have made it this far.
I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.